What effects can the pandemic have on gold trading around the world? Can institutional investors and central banks change their buying patterns? Well, today, joining me is Steve Hanke. He is the professor of applied economics at Johns Hopkins University. Thank you so much for coming back on the show, Professor. Good to see you. Hope you're staying safe.
Well, good to see you, and I hope you're staying safe too, Daniela.
Yeah. It's definitely turned our world upside down. And I always think of you because I see on all the television monitors research coming out of Johns Hopkins University providing the numbers for us here on this pandemic. Before we talk gold and central bank buying, I wanted to get your thoughts on what's happening, especially with numbers coming out. Now there's reports saying we can't trust the numbers out of China. Bloomberg putting out that report. What's your take on it?
Well, the first thing with regard to Johns Hopkins, I'm kind of thinking back. Everyone, this is my 51st year on the faculty at Johns Hopkins. And of course, everyone thinks of Johns Hopkins and they think medical school. And,
yes.
And I'm an economist. And they always say, Hanke, what are you doing at Johns Hopkins? I thought you were an economist. Anyway, so it is number one. I mean, and it comes through now in this pandemic. You can see the leading cutting edge research coming out of Hopkins, which I must say I'm quite proud to be associated with such a great place. By the way, my youngest daughter actually is a professor of medicine at Johns Hopkins, so we do have our foot in that door. Mm-hmm. My general thought is, first of all, the places that have done well at controlling and counting properly the victims of this pandemic are countries that have small, efficient governments and free market economies. You look at Singapore, Hong Kong, they're right up there on the top. You look also at Sweden. Now, Sweden, by the way, people say, well, Sweden, that's a welfare state. Well, it might be a welfare state, Swedish style, but if you look at the market freedom rankings, it ranks very high. It's one of the most competitive and free market economies in Europe. And Sweden is doing very well. The 5 Ps, they've all practiced the 5 Ps, prior preparation, prevent, or performance. Wherever the 5 Ps have not been applied, you have a disaster on your hands. And wherever you have a big bloated, inefficient governments, big state sectors, you have big problems. Look at Italy.
Right.
Poor Italians can't even count the number of people. We're talking about China. China, we know the communists are lying all the time. So that's not a surprise. What's surprising for most people is you have a country in Western Europe and they're clearly, they can't even count the people who are dying, let alone the people who are and have the virus. So the 5 Ps are very important. Small small government free market economies, those have been important. And the other thing that I think, going into the second phase of my thinking, the sledgehammer approach being used in most European countries and the United States is turning out to will be a very costly mistake. And what I mean sledgehammer, they haven't planned anything. They just have a blanket program. We're all locked in our condos or houses or what have you, apartments, and can't move, and the economy shuts down. Now, the economy shutting down, the cost is going to be absolutely phenomenal of doing this. If you look at some place like Sweden, Sweden has a very laissez-faire, very targeted approach, and they're doing very well. The kindergartens are still open, the grade schools are still open, most factories are still open in Sweden. They are not posing this sledgehammer and essentially wiping out the economy. They're doing a benefit cost calculation and isolating those people. That they're doing a lot of testing, by the way. You have to do a lot of testing so that you can determine who is infected and who has to be isolated. That's the key to the thing. And Sweden is the only one really in the Western hemisphere that's doing a good job. Singapore did a good job. South Koreans did a pretty good job. Taiwanese, Hong Kong. The conclusion is that the economic costs are going to be much more catastrophic than anyone can imagine. And that's because of no prior planning. No one knows what they're doing. The big central government's coming in with a big sledgehammer and just banging everything shut. And that's it, because they can't do any finessing. They're too big and cumbersome.
So, we have 6.6 million jobless claims, filed just last week alone. You're talking about how this is just catastrophic. I mean, how does an economy recover from that, Professor?
Well, we don't know exactly, because this is not a normal kind of crisis. I mean, it's not like a normal banking crisis, a normal currency crisis, a normal recession. It's something we haven't observed before. So it's a little bit hard to start making a projection about how you think it's going to unwind. But I think there'll be a lot more road bumps than most people anticipate. So I think we started before the pandemic in the United States. Balance sheets of companies were good. As I told you the last time we spoke, the money supply was growing quite rapidly. Everything was looking great. And then we were hit with this.
Right.
And normally you would say, well, if it was kind of a minor thing, you'd come out of it pretty well because you went into it pretty well. I'm more cautious than that. I think we might have many problems associated with coming out of this. And one of the biggest sets of problems and uncertainties, it isn't the pandemic. It's what the characters are doing in Washington, D.C. They could lay on us so many disastrous policies that we almost never come out of it. In fact, I think that's what's going to happen. We're going to have so much central planning and such a socialist overlay on the whole thing that it could tamp the recovery down, and we're slow coming back, and productivity and economic growth potential is tamped way down forever, because we're going to have the heavy hand of the state in here mucking everything up. And
coupled with that, Professor, you talk about the sledgehammer approach. Add on top of that, now we have quantitative easing to infinity. Did the Fed have another choice?
No, I think the Fed, about 3 weeks ago, John Greenwood, chief economist at Invesco, by the way, he's a fellow at Johns Hopkins too, and an old friend. John was the one who installed the currency board in Hong Kong in 1983, by the way. John and I recommended a variety of a Badgett rule. Badgett, the famous editor of the Economist magazine in the 19th century, said that whenever you have a panic, the central bank's main role is to discount good paper, anything with good collateral, and to charge penalty rates for extension of credit against that good collateral. And that's essentially what Greenwood and I recommended doing, plus one other thing, and that is that the Fed, since the dollar is the center of the world and everything is invoiced in dollars, all these supply chains all over the world are all dollar denominated, that you had to put in swap lines between the Fed and other central banks around the world, so that these central banks have a limited capacity, dollar capacity, and you've got to increase that to infinity, basically, which they have done, by the way. So the Fed has done, they acted decisively, they acted rapidly, and they have essentially imposed the Badgett rule. Anyone with good collateral can get credit from the Fed, and that includes foreign central banks with these swap lines. So as far as the Fed's concerned, I have absolutely no complaints. The thing that we have to watch out for is the fact that we have now had the greatest surge in the money supply in the history of the United States. And if that is sustained, that growth rate, and continues, we will have quite a bit of inflation coming out of it. There's no question about that. If they take the liquidity out, as I hope they do, at the appropriate time, we won't have an inflation surge. So we don't know what they're going to do. If they keep the accelerator on the gas, we'll eventually have quite a bit of inflation. If they do not and remove things properly, we can settle down without much inflation surge.
Shifting gears to gold now, Professor, and I really wanted to ask you this question. We see countries like Russia saying they're going to halt their gold purchases right now. But my question was, look at the situation in Italy, obviously critical, one of the largest central bank gold holders in the world. Could we see countries like Italy offload their gold, start selling their gold to get out of this crisis?
In general, why would a central bank want to sell gold? Because central banks can print money. So why do they have to sell gold? They can print their own money. Now, the question comes, what if a lot of the businesses in those countries are doing business in dollars? In other words, that you're in the Eurozone, but everybody's doing business in dollars, or Japan, or Russia, or Turkey. So one of these other countries, yeah, they can produce their own domestic money, but they can't produce dollars. But this is the reason that Greenwood and I recommended that the Fed establish big swap lines with all these central banks, because then they can borrow from the Fed, okay, and supply dollars to those domestic companies and businesses that are in need of dollars. So in that case, too, they wouldn't have to be selling gold to get dollars. They just go in and do a swap. They can swap their gold to the Fed and get dollars. And of course, the swap gets reversed and the gold comes back from the Fed to wherever that central bank happens to be. So there's really no reason for a central bank to sell its gold. And if you look, by the way, at what went on last year, we had this huge surge, one of the greatest buying sprees of gold in history. And what do you have? Turkey bought, out of the total increase in gold, I just did some calculations figuring, Danielle, I know the book you read. I knew something was going to come on gold. So Turkey bought 24% of that increase last year. Russia bought accounted for 24%. Here's a shocker. Poland accounted for 15% of the purchases last year. China 15%, and Kazakhstan 5%. You add them all up, and you got 83% of the increment in that record purchase of gold last year by central banks.
That's right.
Was accounted by those 5 countries. So I see absolutely no reason for any of those 5 to be selling gold. Maybe they won't buy as much, but they have no reason to be selling.
I guess in my final question, we just wrapped, the worst first quarter in history for the Dow. And gold is up 4% from the start of the year. But is there any safe play right now? Is there any safe asset?
Well, I do think, as we said discussed the last time, gold is in a bull market, and that remains pretty safe. Although, if you really want to get safe, I happen to be I like treasuries. I'm just setting on a pile of 2 years. Happens that it's worked out well. I mean, I'm actually up, and since the crisis, I'm up slightly.
What do you recommend to people who say, well, look, the U.S. equities are so depressed right now, we should be going on a shopping spree here. But how do you determine if this is the bottom?
I think, given what I said originally, with all the uncertainties involved, I'd be looking very carefully at what you are going to be buying. If you're a value investor, hopefully you're on a big pile of cash. You're a Warren Buffett, and you're you're just waiting to pounce. But it's too early to pounce. There are too many uncertainties going on right now. You wait until the so-called peak of the infections occur, and we're on the other side of the peak, point number one, and then start thinking seriously about things, and then watch how the economy starts coming out of things. Because as I said, it's a little bit hard to. I'm not predicting how it's going to come out. I happen to think there probably will be quite a few unexpected speed bumps that are hit. It's not going to be a normal kind of recovery, a V-shaped kind of recovery from a recession, for example. Right. I think it will be a very uncertain picture. So wait, and study. Deliberately do what you're going to do, but don't jump the gun.
That's really sound advice, Professor, that I think a lot of people need to hear. I guess before I let you go, this must be, as an economist, of course, there's so much pain and suffering out there, but it must be fascinating for you to be studying this from an economic standpoint.
It is. I spent in fact, it wasn't by design, it was just by events, but I spent my whole career essentially as a big firefighter. And the biggest one I ever was in was when I was Suharto's chief advisor in 1998, the Asian financial crisis. But I've been in many other ones, whether it's stopping hyperinflations in Bulgaria, Estonia, you name it, Argentina, and so forth and so on. Those are all relatively small, but they at least get you in shape for being essentially a firefighter. Now, what does a firefighter do? A firefighter, life is usually fairly calm. They stay in the station, they maintain their equipment, they have practice drills, they polish the trucks, show visitors around, et cetera, et cetera. That's kind of what I do until a crisis hits. But when one hits, I'm ready to go, and I'm sleeping about 5 hours a night because I'm talking to central banks and treasuries all over the world, and investors, and also people like you. So it's quite an exciting time. But I mean, the magnitude of this thing is just beyond anything I've ever experienced in my life. I mean, a currency crisis, what's that? That's usually isolated with one country. I mean, you got the Russian ruble collapsing in 1998, or the Indonesian rupiah, or something like that. It's very confined. Or even the savings and loan crisis in the United States in the 80s. That was the first big crisis I ever was really involved in. But that was a very isolated part of the U.S. economy. Even the savings and loan sphere didn't spill over really into the whole general economy. It was a very isolated kind of thing. But at any rate, it gives you wonderful practice, and everything is the 5 Ps. It's like the 5 guys in the firehouse. Prior preparation prevents poor performance. If you don't practice the 5 Ps, when the alarm rings, you're screwed. You're toast. You're not going to be able to put out the fire.
Professor, I know how busy you are, so I really appreciate you taking the time from your home to join us today and shed those insights and wise words for us. Thank you so much, and stay safe.
Same to you, Daniela. Great to see you. Bye-bye.
Bye-bye, and thank you for watching. We'll have much more for you on Kitco.com.